Hey guys, what's up? Welcome back to Investing in Stocks for the Long Term. This is Tom. I just got through shooting some baskets and I'm actually having to retake this video because too many dribbling sounds and everything else. So yeah, it's important to have an outlet when you invest in stocks. You don't want to be sitting in front of the screen all day. That's one of the things that I'm promoting on this channel. And so today's video actually pertains to that. It's Jim Cramer's Confessions of a Street Addict, and I could say that his approach to investing and his approach to life was really not very balanced. Now granted, he did get some really good returns in his day. I'll have to look him up exactly to see what he did, but he did beat the market, I believe, over his time as a hedge fund. He has a knack for stock picking. Now today, I don't think he's done as well since Mad Money has started and everything like that, but that may have been partially due to the presence of his wife, market conditions, getting out before the dot-com bubble burst, his analysts, etc. Could have been dumb luck. It's hard to say, but no, I don't think so. But anyway, so basically, is this book a good use of time? Should you read it? I would say, if you like the market and you like to read and you're interested in people, yeah, you should read it. It probably needs an editor. It rambles along a lot about his personal life, anecdotes, little details of his business life, what was going on with the street.com and this, and somebody ripped him off, the SEC investigations into whether he was allowed to promote a stock in a certain way. All these things that are not really that relevant for your portfolio. They're entertaining to a degree. They're also just like, all this stuff happened 20 years ago. I don't know these people, okay. So you get the point. But still, it's got that manic style, and it's a man who's in love with the market, and it's almost like a memoir of addiction, as the title suggests. He was talking about stocks like just with his coworkers, right in front of his dad and his sister the day after his mom died. He was coping. He was using stocks to cope. Stocks became his life. He tells about how he was continuing to talk about him right as his daughter was born. Just things like that. Now, along the way, what sort of actionable advice does he give? It's definitely not bullet pointed. And I went through the book and I looked for some things. What do you see? What were his strategies? And the thing is his strategies were primarily things that aren't really accessible to you and me. Now, there were things that were the standard Peter Lynch style, beat the street stuff. He walked into walked into Foot Locker and said, "Hey, what's selling?" And the guy said Reebok, and he said, "Oh, okay." So he went and researched Reebok, found out it was underfollowed, undervalued, everything else. So Reebok, he started selling Reebok to everybody. It went to $100 a share, and nice round number like he talks about, and he made a lot of money. Now, his boss actually didn't like him doing that. He wanted him to stay with the recommended stocks that you're supposed to go with. You're not supposed to be bringing in things, and supposedly that's to protect the clients, but it's also probably to make the firm more money. So the things that he did, he was a very fast-paced trader. He reviewed his positions every hour. So there was some fundamental stuff going on, but mainly it was creating a buzz. He would look for good things, but he was a short-term trader. And I'm going to read a little bit about how he was able to manipulate the market to his advantage, and make this stuff work. So he says, "For a couple of years, things were normal. I would spend all day researching companies, and my wife would trade. My firm grew in size, etc." And then he says, and then we got this other guy, Jeff, from Columbia Business School, and he says, "That's when we pioneered our formula for making money every single day, day in, day out." Now, he may be exaggerating, but you'll see how he was able to do it once you hear this. while we also worked to have long-term capital gains. We developed a style that consisted of figuring out what would be hot, what would be the next big buzz. We became merchants of buzz, getting long stocks and smoozing with analysts about what we saw and heard that was positive. We would get short stocks and talk to the analysts about the negatives. We would work to get upgrades or downgrades because we knew cynically that Wall Street was simply a promotion machine. We recognized that analysts existed to promote stocks, typically the stocks their companies brought public in order to get those stocks higher. Sometimes they worked to get them higher so they could do a secondary. Sometimes they worked to get them higher so they could do financing, a debt deal, a convertible bond. And sometimes they pushed them up because, heck, their job was to push stocks. That's what they did. We had it down to science. We would look for stocks that could technically ready to go up on good news. Then we would call the companies trying to find anything good we could say about them. I would call the analysts to see if they were hearing anything. We found a stock that looked technically ready to break out, or we found something positive at the company, and I knew the analyst community didn't know anything positive. We would load up with call options and common stock and give the good news to our favorite analysts who liked the stock so they could go do their promotion. See, Citron just cuts out the middleman. They just load up on call options and release the report. That's the way I like to do it. But anyway, that would get the buzz going along, and we would be able to liquidate the position into the buzz for a handsome profit. So I think there is some insight here on how the game is played, and I think that is the value of the book. It allows you to realize, okay, I don't have an edge like Cramer had in that sense. What is my edge going to be? Is it going to be knowing the industry better? Is it going to be subscribing to a newsletter service? No. What is it going to be? Is it going to be technicals? Is it going to be a fundamental strategy that's been proven, like nets? Is it going to be piggybacking on other great investors? It's got to be something. And this short-term stuff, I don't think works for the individual investor primarily, unless you are finding something that's underfollowed, undervalued, under the radar, and at a technical point. But you gotta have that edge. You can't just be willy-nilly and around. So anyway, the other point of this book that I think is really worthwhile is when he talks about the IPO process for thestreet.com. And how it was overhyped and everything, and how they bid it up. I thought that was a really entertaining spot. So let me see if I can just find that real quick here. We're not going to get into all the weeds of it. You guys are probably ready to do something else and look at a stock that actually lists on the current exchanges. But so he talks about how they weren't profitable. Let's see. But people were looking at the $1 billion valuation of MarketWatch. And so because of that, they said, okay, well, based on that, how are we going to value you? And so they put them at $9 to $11. I'm not sure what that was, an actual market cap, but let's see. The stock kept rising as they were going across the country. First it was 9 to 11, then it was 13 to 15, then it was 15 to 17, and then they got it all the way up to 19. And they were doing these road shows and everything, and this is not serious. Like, and then they were delaying the stock and everything, and it ended up opening up. Long story short, it ended up opening up. They kept delaying it, and he was on the phone trying to tell them, you've got to stop it. Who knows whether this is true, but you've got to stop the stock. This is the highest it's ever going to be trading at. This is going to kill our people. Who controls the stock? And they said, it's not us. We don't control it. Goldman said, we don't control it. He explained to me the key to the whole .com craziness, the missing piece of information that I would never hear from anyone else, even to this day. I don't control the buyer. Huh? I said. Goldman's running the show and it doesn't control the buyer. That's right, he said. Knight Trimark controls the buyer. Knight Trimark? How can this be? How can Knight Trimark, which I barely know is some sort of small retail house of tiny orders, never a factor in any stock I ever traded, be in command here? Who could those schmoes be in charge? Who put them in charge? They're in charge of all the .com deals, the voice told me. Bet against Knight Trimark, I said. Can't, said the trader. They're too powerful. The trader didn't know how much Knight had to buy and at what level. Some outfit that didn't even exist a couple of years back was trumping fabled IPO king Goldman Sachs at his own job. Come on, Goldman. You're Goldman. Get control, I yelled. I don't think he was listening. He rang off and I heard the salesman that the stock was going to open $55 to $60, probably at the top of the range in a few minutes. Congratulations, he said to me. For what? I said, you're rich. Damn it, I said, I was already rich. I wanted this to be good for the company. I can't sell anything. This is the worst thing that could happen. Everybody will hate us till kingdom come. Everybody will lose money today. With those words, all the confetti, and then anyway, he told his family to sell the stock. His dad wouldn't do it. At 11:43, the stock opened at $63, and then within minutes, it was at $70, which was the highest value that it ever got. And so it shows you how, and then, the Knight Capital came in or whatever and tried to bid the stock up even more. Okay, $250 million. $250 million would have been $11 a share. So this thing was what? 250 times 7. You're looking at close to a $2 billion market cap for something that was losing a fortune, no real plan to be profitable. So that shows you what it was like in the .com era. And, I think this book is definitely worth your while if you're interested in all that madness and speculation and how this is just not a sustainable lifestyle, how Cramer had to retire, because it was taking its toll on him. It was the madness of running a hedge fund. You as an individual investor don't have to swing at every pitch. You can wait. You can do your due diligence, take your time, and live a much less stressed lifestyle. So until next time, and I will see you guys later.